What's going on, everyone? Jay here. In today's episode, I want to break down for you one of my favorite stocks in the stock market right now. It's not one of these high-flying growth stocks. It's a boring dividend stock that has been depressed in valuation for a little over a year now, and they're returning a 7.5% dividend. It's absolutely crazy. Stick around, stay tuned for the video, and I'm going to tell you all about my favorite stock in the market right now. The stock I'm talking about is Verizon, ticker symbol VZ. If you look in the past year to date, Verizon is down about 13%, but look at this, man. They're getting smoked in the last year, down 31%. For a company as stable as Verizon, it's pretty remarkable that all the money seems to be flowing into the top 5 big tech stocks, and a lot of these players that are great businesses who make a lot of money per share are just kind of falling by the wayside. And I think there's a lot of opportunity in Verizon stock. All right, check it out, guys. They're paying a 7.46% dividend, which is amazing on this $35 stock price. And PE ratio of 6.82. Verizon's not going to be a stock that's going to be doing 20, 30% growth year over year. But if you look at Verizon's overall growth since this chart from Motley Fool is around, 2010-ish, it's like significantly outperformed the S&P 500 by over 100%, like around 120%. It's outperformed. It's down from its peak, but if you look at the natural trajectory of the stock and you draw the lines out, we're pretty much right on path of where we should be. Maybe they got a little bit overblown from all the money that came into the markets because of the pandemic, but I love Verizon, and here's why. All right, gang, this is Verizon's chart courtesy of Yahoo Finance. They're trading at around $35 per share, $147 billion market cap, and they are paying out $2.61 per share per year in annual dividends, and that's around 7.43% of their current share price, which is an amazing dividend. You're not going to beat that, especially. This is really important, guys. Pay attention to what I'm about to say. As rates come down, all these high yield savings accounts are going to go back to like paying almost nothing. It's going to take some time, but like I love SoFi, but SoFi and Capital One and all these like CDs that are paying 4.5%, 5%, 4.25%. As rates go down and as Powell cuts rates, those savings and checking account rates are going to go down with it. So a lot of money is going to pile into these high dividend stocks like Verizon. I promise you. So right now you're getting like 7.5%. So as that share price goes up, it's like per share that you're buying, you're getting less and less percentage of dividends. So definitely, this is not financial advice, but accumulating Verizon stock at this market cap seems extremely attractive to me. And if you're lazy and you don't want to I'm going to teach you a quick little way to figure out EPS in regards to a payout that a company's doing in their dividends. So right now, per quarter, this one's a little easier. So last quarter, they met their expectations at $1.20 per share. So you times that by 4, and that's going to give you, they're taking in $4.80 per share in earnings, right? And they're paying out of those earnings $2.61. So the payout is, right around 50-ish%, give or take, and that's a good payout ratio. That means that the dividend is safe in the perspective of them potentially cutting their dividend. But then if you want to do even a little more homework, which I always do, so if you're on Yahoo Finance, click on historical data. And then go down, drop down the time period to max, show dividend only, and frequency, we're going to go to monthly. Then we hit apply. And here we're going to see all the payouts that Verizon made since 2000, way back. Look at all this. Look at all the years of increased dividends, man. And another thing that I really look at, the worst case scenario, black swan event during COVID. Did they cut their dividend? They paid it in January, April, July, and October. They paid all 4 of their quarterly dividends, and they even increased the dividend. It's unbelievable, the stability of this company. I mean, if you don't want a lot of risk in your portfolio, I think there's at least 20 to 30% of sheer appreciation with Verizon. And I also think the dividend is super safe. So with that share appreciation and over a 7% dividend, it seems like a no-brainer. Another thing I like to look at, guys, is to go to click on statistics. I always like to compare market cap towards enterprise value. Enterprise value is like if they would say to sell the business, this is what it's actually worth. The market cap is like what the stock market says it's worth, but enterprise value gives you more, gauge of like, okay, what are all these assets in this business actually worth? And the trailing PE is at 6, forward PE is at 7, which is still, I mean, if Verizon gets in that 10, 12 range, that's when you're like capped with buying shares. Just let the dividends reinvest then. But look, operating margin, TTM means trailing 12 months, 22%. I mean, come on. I mean, these companies run a lot of debt. So the debt might scare people, but their cash flow is steady enough that they're going to constantly be banging off the debt, even though $186 billion is a shitload of debt. And it's super scary. But I do think that, look, the operating cash flow trailing 12 months is $38 billion. So that means like $40 billion a year of cash flow. They can easily pay off whatever the bills are coming in. And even if they did, 50% of that towards debt, that's $15 billion per year. So in about 10 years, 12 years time, that debt will be essentially paid off as long as they don't take any more debt. But I love this stock. And it's also the volatility is low. Payout ratio, I always like to check 50%, right around what I was saying earlier when I was doing it the other way. And there's not a lot of shorts, 64% institutional ownership. I like anything over 50% for the stocks that I'm in for sure. Short float 1%. You don't have to worry about the short attacks. And for all these myriad of reasons, this is why I think Verizon stock is a buy, and that's why I'm buying this stock. I'm accumulating for sure. I just bought 200 more shares. I'm going to slowly accumulate as this stock goes down. And it's always good to buy a dividend stock like right after the dividend X date. The X date was on Friday. That's when if you had the shares, you get the dividend. So after that day happens, the next day, people start selling their shares. And that's what happened. It was like $36, $37, and now it's down to $35. So as it goes down, I'm loading up. Let me know in the comments below if you think my analysis on Verizon is attractive to the stocks you want to buy. Let me know if you like these type of videos. If you want me to break down any more stocks like this, let me know in the comments below. Thank you guys so much for tuning in, and we'll catch you guys on the next video. Peace.